Chris, thanks very much for joining us. You've recently issued a report in terms of coronavirus and the impact on European real estate. I guess what were some of the key thought pieces that came out of that?
We have to recognise that it's a multifaceted crisis. First and foremost, it's a health crisis. It's also a crisis in the sense that we can't go about our normal economic activity at the moment, or indeed our social activities. Policies of suppression are placed upon us, and we have to practice social distancing. And that, of course, is going to have profound impacts for the economy as well. So from a real estate perspective, we're initially thinking about what does that mean for the sustainability of income, and that's going to vary quite significantly by different sectors and different geographies.
And you mentioned in the research that the short-term response was really crucial, and I just wanted to pick up with you how you felt governments and I guess also the G20, their actions had, I suppose, how they helped influence it from your point of view.
I think it's been very positive that governments and central banks have acted quickly and at scale. There's a huge range of policy measures that have been put in place. From a monetary policy perspective, central banks have been quick to act. I think reducing interest rates and boosting liquidity has been a positive. They've reduced the risk of contagion to the financial sector, and things like lower interest rates will provide a boost to the economy when we get towards a recovery. There's been large fiscal packages announced as well. Generic fiscal packages as well as interest rate cuts are quite blunt tools for this crisis. And while they're a positive, I think what's critical has been the measures taken to support businesses and individuals through this crisis. Their governments have done a lot across Europe, and perhaps more importantly, they've signalled a willingness to do more. And so we can expect to see more action as this crisis evolves.
And I was interested to read in the report as well about you seeing this very much as a crisis around solvency.
Yes, I think that's right. I mean, the global financial crisis was a liquidity crisis. It was born in the financial sector, and that threatens a solvency crisis. This is a pure solvency crisis. Businesses can't go about their normal activity. What policymakers are trying to do is effectively press the pause button on the economy, keep everything in deep freeze, and then quickly thaw it at some point in the future. And if successful, that will probably mean the least damage to the economy and less damage to the income streams of real estate investors too.
Great. Thanks very much for sharing your insights with us today, Chris.
Thank you.